Hi, my name is Nur Shafiqah binti Abdullah, matric number 256459. Today our group will explain about the 5 products that offered by Ambank related to the international trade and finance. Before I explain more further, I would like to introduce my friends, which are Nurul Liana, Aisha, Nur Juliana, and Rasmiati. So, 5 products offered by Ambank. Shipping guarantee, bankers acceptance, letters of credit, trust receipt, and the last one is the foreign currency trade loan. So today I will explain about the shipping guarantee. Shipping guarantee is actually an indemnity rather than a guarantee given by the customer, countersigned by the bank specifically to a shipping company or its agent for the purpose of allowing the shipping company to release the merchandise to the consignee name in the bill of lading without the presentation of the original bill of lading. The indemnity have no expiry date as it acts like indemnity, so the bank is also primary liable. Basically, shipping guarantee is an indemnity document issued by a bank addressed to a shipping company on the instruction of an importer or the customer to take delivery of goods from the shipping company or its agent pending receipt of the bill of lading relating to the shipment under the concept of kafala. In addition, this shipping guarantee also apply the Sharia concept, which is kafala or guarantee. Kafala refers to a contract where the guarantor conjoins the guaranteed party in assuming the latter's specified liability. So, do you need a guarantor or collateral in applying shipping guarantee? A guarantor is to be provided if required by the bank, and the collateral also to be provided if required, and the collateral must be acceptable to the bank. So these requirements are depending on your creditworthiness. So if you have a lower creditworthiness, you may have to provide the guarantor or collateral. So for more detail, you can visit the Ambank Group website to know more detail about the shipping guarantee. So what are the major risks? So upon the issuance of the shipping guarantee, you will lose the protection under the letters of credit or collection bill in the event document subsequently received contains irregularities or discrepancies. You will be liable to honor the payment. Upon receiving claim made against the shipping guarantee, the bank will proceed to honor the guarantee by making payment, and the bank has the right to debit your account or via complementary term financing I for the settlement of payment made under such claim. So the next is the advantages of the shipping guarantee. The importers can possess the goods immediately upon the arrival. The importers also can avoid or minimize paying demurrage charges. The next is disadvantages of the shipping guarantee. The importer must pay the bill even there are discrepancies in the document. Discrepancies means inconsistency or unacceptable or unexpected. For example, the quantity or the quality of the goods are not same as in the agreement. But the importer must pay even there is the discrepancies in the document. So, margin deposit or trust receipt may be required to support the shipping guarantee. So, that's all for me. I will pass to my group member to explain another 4 products. Thank you.
Hi and Assalamualaikum. My name is Nurul binti Rahman. My matric number is 256359. Okay, now I would like to explain my part, which is a trust receipt that provided by Ambank. Okay, what is this product about? Means that in other words is what the meaning of the trust receipt. Okay, trust receipt is a form of advance provided by Ambank to finance the purchase of goods by the buyer, which is customer, and then the bank pay the seller on behalf of the customer and allow the customer to take possession of the goods and act as a trustee to hold and sell the good in trust for the bank with the execution of a trust receipt agreement. And then the bank give the customer a credit period to allow the customer to deal with the good to generate profit to repay back to the bank. Okay, so the next slide explain what are the product feature, means that what the benefit that customer get by using this product. Okay, first, the customer can finance in Ringgit Malaysia, 100% financing of invoice value, no minimum amount and tenor, and customer can financing tenor depending on the asset conversion cycle of the customer and up to the maximum tenor that approved by the bank. And customer can get the interest based on base lending rate on accrual basis. Partial and early settlement are allowed, and to finance purchase draw under letter of credit or collection basis. So, what are the role and the obligation when the trust receipt is executed? The customer must acknowledge receipt of the document of title to the goods. The customer must hold the goods as a trustee for the bank, and the customer must undertake to pay the proceeds from the sale of the good to the bank, and the customer must undertake to the warehouse and ensure that the good is the name in the name of the bank, and the customer must authorize the bank to recover the proceeds of sale from the third party, and the customer must undertake to keep the transaction separate from all the transaction, and the customer must ensure the sufficient fund. That's mean that the customer must authorize the bank to debit customer account with the bank for any bank charge like commission, fees, out of pocket expenses that relating to the financing of the trust receipt, including its repayment upon maturity. And then the customer must ensure that the supporting document, especially for the trust receipt financing that related to the customer nature of the business, and it must the business that must genuine transfer of good, and the customer must ensure that no other means of the financing on the same of the transaction have obtained, and lastly the customer must apply for trust receipt facility and must ensure that the facility is available and adequate for the drawdown. Okay, that's all for me. So I would like to pass to my friend to explain the other product that are provided by the Ambank. Thank you.
Hi, Assalamualaikum. My name is Aisyah binti Ahmad Sairi. My matric number is 256107. Today I would like to present about letter of credit. Letter of credit can also be called as credit letter, which it is a letter from a bank guaranteed that a buyer payment to a seller will be received on time and for the specific amount. In the event that the buyer is unable to make a payment on the purchase, the bank will be required to cover the full of remaining amount of the purchase. Letter of credit is typically a negotiable instrument. The issuing bank pays the beneficiary or any bank known the beneficiary. Letter of credit is a document sent from a bank or financial institute that guarantee that a seller will receive a buyer payment on time and for the full amount. It often used within international trade industry, and bank also collect fee for issuing a letter of credit. That's how they gain money. Bank typically require a pledge of security or cash as collateral for issuing a letter of credit. So bank need a collateral or security to issuing a letter of credit on behalf of their customer. Next, I would like to explain about a type of letter credit. First is a commercial letter of credit, where it is a direct payment method issuing bank make payment to the beneficiary. Second is revolving letter of credit, where the letter of credit allow customer to make any number of draw within a certain limit during a specific time period. They might specify the duration of the time. Third is traveller letter of credit, where the letter of credit guaranteed that issuing bank will honor draft made at a certain foreign bank. Lastly is a confirmed letter of credit. There's also an export letter of credit and import letter of credit, and also irrevocable letter of credit, as I have been reading in our textbook. And I would like to explain a little bit. Export of credit is open at the initiative of an importer, and it is normal letter of credit open and issued by the issuing bank upon receiving the appreciation from the importer. It is issued on behalf of the importer and in favor to the exporter. Export letter of credit is the most letter of credit that I have been using. Import letter of credit is an opening of the letter of credit initiated by the exporter. Exporters send the document to the issuing bank without prior correspondence with the importer. And lastly is the irrevocable letter of credit, where the letter of credit cannot be modified, amended, or cancelled without the consent of the issuing bank, beneficiary, perhaps the confirming bank. Okay, next I would like to explain about the advantages letter of credit. Letter of credit is a highly customizable and enable new trade relationship by reducing credit risk, but it can add to the cost of doing business in the form of bank fees and formalities. Firstly is highly customizable, as I have mentioned before, and second is safely expand business internationally. Also, as I have been mentioned before, it is often used within international trade industry. Third is seller free of credit risk, where seller are free to make payment because the payment have been responsible to the bank. Fourth is work as a credit certificate of buyer. Letter of credit work as a credit certificate for buyer. Fifth is seller receive money on fulfilling terms. Sixth, pre-shipment financing available to seller. Next is the disadvantageous letter of credit, where the additional cost is charged by the bank that the buyer assigned to make a payment on behalf of their purchase, so that bank charge some fees on that transaction. Second is currency risk, where as it is often used in international trade, it will consist of uh, two different country that using a different currency. So currency risk will occur uh, in this transaction. Third is risk default by issuing bank. That's all for me. Thank you.
Hi, Assalamualaikum. My name is Juliana Binti Saleh. My meeting number is 256260. So I'm going to explain about bankers acceptance. For definitions, banker acceptance refers to a bill of exchange issued at a discount drawn on and accepted by an authorized bank to finance genuine trade transactions. Meanwhile, Ambank banker acceptance means reducing bill of exchange drawn on and accepted by Ambank payable at a specific date in the future. In a practice, it is a short-term financing instrument provided by banks for customers to finance first local sale or export based on credit terms and local purchase or imports based on cash item. Characteristic and feature. It is denominated in RM and payable to the order of drawer drawn by a customer on his bank to finance either export, import, domestic sale, or domestic purchase. Drawn in multiply of 1,000 ringgit with minimum value of 50,000 ringgit for each BA. Minimum is 21 days, maximum 365 days, or up to the tenure approved by the bank. It is issued at a discount and redeemable at par on maturity. Eligible as liquid assets held by banks settlement based on discounted formula. How does an importer use a banker acceptance? An importer can use banker acceptance to finance his purchase of goods from foreign supplier. After negotiating price with the foreign exporter, the U.S. importer creates a time draft and presents it to his bank. The bank accepts the draft, discounts it, and gives the importer cash which he used to pay his foreign supplier. On or before the maturity date of the accepted draft, the importer must pay the bank the first amount of the acceptance. Life cycle of a banker acceptance. A bank customer makes sale or purchase. Then, bank provide financing by accepting banker acceptance drawn by customer. Bank may keep their BA till maturity, or bank may sell their BA certificate to potential investor. On maturity, BA customer pay bank the full face of value and bank pay investor. So as you guys can see that this is the two example of the receipt of banker acceptance.
Assalamualaikum warahmatullahi wabarakatuh and hi, my name is Hasmiyati Binti Saidin, matric number 256403. So I will explain a little bit about foreign currency trade loans. What is foreign currency trade loans? Foreign currency trade loans is a short-term trade loans denominated in foreign currency to finance customer imports under letter of credit, documentary collections, or the open account. The bank will pay the seller on behalf of the customer and allows the customer to take possession of the goods and give the customer a credit period to allow them to deal with the goods, generate proceeds to repay the bank. The benefits of foreign currency trade loans is the flexibility for early or partial settlement before maturity with the subject to funding costs, flexibility of payment in ringgit Malaysia or foreign currency at maturity, and natural hedging for customers if they are repaying the loan with incoming export proceeds in the same currency. The risk is where the bank may take legal actions to the customer if they did not keep up with their payment. In foreign currency trade loans, there is a Sharia concept applicable in it, which is murabahah. Murabahah refers to a sales and purchase of an asset where the acquisition cost and the markup are disclosed to the purchaser. In murabahah transactions, the customer will be appointed as an agent by the bank to acquire the required assets. The criteria of the assets under murabahah transactions are as follows. First, the asset must exist and identifiable in terms of its location, quantity, quality, and complete in its physical form. Assets under construction or to be constructed must not be sold through murabahah transactions before the construction or decommissioning is complete. The assets must be permissible under Sharia, valuable and beneficial to the purchaser. And lastly, is the asset must be transferable, which is some things that can be delivered. Customer also may need takaful coverage in foreign currency trade loans, which is required to adequately protect the asset. Customer may choose to take the takaful coverage with any takaful company deemed acceptable by the bank. The available takaful that is applicable for this facility is the open cover takaful, which will cover the loss or the damage of the goods during shipments. It compensates the owner of merchandise for losses in excess of those which can be legally recovered from the carrier. The losses in this coverage may include the fire, shipwreck, piracy, inclement weather, and so on. The customer also may need a guarantor or collateral in foreign currency trade loans, and requirements are depending on their credit worthiness. So for more details of the products and feature benefits and others in Ambank, you may visit ambankgroup.com. That's all from us. Thank you.